All right. Welcome. Welcome to today's session. It is a few minutes before we actually start. Great to have you here. My name is Brian D'Amico. I am joined by my fellow instructors here at VectorVest. We've got Todd Schaefer, Jim Penna, John Marabu will be here shortly. But it is great to have you here. I thought I would pop in a few minutes early. Welcome to today's session.
And that way I could.
It is a few minutes before we
make
actually
sure
start.
all of
Great
the
to have you
technology
here.
is
My name is
working
Brian.
on my side.
All right, so if you can hear me, let me know in your chat that everything's coming through loud and clear. In fact, let me move slides. If you're using the GoToWebinar platform, which I think most of you are, there you should see a screen that looks like this. Let me get my laser pointer. You'll see something like this, a little orange button. You might need to click that over. Now, some of you might be using a mobile app or listening some other way, so it might look a little different for you, but find the little box where you can type in something for me, and myself and my teammates will see it and hopefully say hi. No, just kidding. Yes, so let me just look at my chat box. I see Chris, George, Marie, Patrick, Sandra, Isaac, Sal. A lot of people are saying loud and clear. Awesome. Dennis, Roy, Jerry. Perfect. By the way, this is going to be an interactive webinar, so be sure to get used to that chat box. All right. So, in fact, let me know. It is almost 4:30 Eastern time. By the way, I am on the east coast of the United States. I'm a little north of Charlotte, North Carolina. In the chat box, let me know where you are located. Maybe just your time. Like what time of day it is by you. You know, Ton says he's in the Netherlands. Welcome. Williamsburg, Virginia. Liverpool, Bennett. Colorado, Los Angeles, 3:30, 2:30, 4:28 in Atlanta. 5:28 in Nova Scotia. Richard. Cool, 3:30. So I'm seeing see Edinburgh. 9:30 p.m. Welcome. Wow, people all over the planet. Great to have you all here. Nice. We've got a very, very full room here. So it's great to have you all here. In fact, we've got about 60 seconds before we kick things off. Let me tell you how to get the most out of today's session. We call them the 3 gets. Number 1, get something to take notes, like a pen, paper, a drink. All right. Some people like to take notes electronically. If so, then do that. But I'm a paper and pencil type of guy. So have something to take notes. Number 2, get rid of distractions. So if you have a cell phone, how about for the next 1 hour, you just turn it off? That'd be the best thing. All right. If you have a door, can you shut it? And if you have something else open, like email or whatever, just close it down. You don't want to multitask while we go through this, because we're going to be looking at several examples, and you don't want to miss something. All right, because I don't want you to get lost or anything. Because we're going to be going through a lot of things, and I want you to not miss something. I want you to be able to follow along. So just for 1 hour, get rid of distractions, so that way you're ready to learn. Awesome. So welcome Armand from New York City. George, great to have you as well. All right. M Python, it shows. Nice to have you here. Interesting name. All right. So Kristen, great to have you. Casey, Frederick, welcome to everybody. Let me just switch screens here. I'm looking at my clock. It looks like it is time to get going. So let me officially welcome you to today's session. As I mentioned when I first started the session, my name is Brian D'Amico. I am really excited about this. I've been waiting several months. All right, I had this in the works. We here at VectorVest had this in the works for a few months now, so it's great that the day is finally here. I'm excited to teach you these trades today. All right, because credit spreads are one of my favorite trades. They're fun to do, keeps you active. So I'm excited to be able to share that with you today. So I'm going to give you everything I can for this hour that we've got. All right, Sandra just typed into the chat box, says, I love credit spreads. So awesome. So I hope that spills over to everybody else as well. The results that we're going to look at today, based on what we've done here, but also on what our clients are doing, because here at VectorVest, we actually teach clients how to do this on a weekly basis, and we help them through it. So you're going to see results from some of them as well. So it's not just back-tested results. You're going to see some, what's really going on. And if time allows, we can actually get in there and see some recent things that are going on, right? And then at the end of today's session, if you want to get more information, like there's only so much we can cover in 1 hour. If you do want more information, I will, depending on where you are, I'll point you in the right direction, right? So I'll say, all right, this is where I think you should go. This is where I think you should go. All right. So if you are ready for all of that, if you're good to go in the chat box, give me one more yes in the chat. Let me know, hey, yes, I am ready. Go for it, I see. I love that enthusiasm. I see yes, yes, yes. Patrick, Art, Chris, Isaac, all saying yes in the chat box. Awesome. All right, so credit spreads, they are a great way to generate income. Now, you might be at a point in your life where you want to generate income and you actually need to make withdrawals, and that's fine. It's a great way to do that. But it's also, if you're not at a point where you actually need to withdraw money, it's a great way to steadily grow your account. But I do want to ask you a question. I'm going to put up a poll on the screen. It'll look something like this. Let me see if I've got it. Oh, man, it's not set up. Actually, how about you just do this? In the chat, just type in like a 1, 2, 3, or a 4. How would you rate your experience level? Number 1 would be no experience. 2, you'd be a beginner. 3, advanced, like maybe if you'd be a number 3 if you were already doing spreads. And 4, you'd be if you're doing like condors and butterflies and so on and so forth. All right, so I'm actually seeing a handful of number 4s coming through, but I'm seeing primarily 1s. I see a string of 1s from Delton and Hasib, John, Alfredo. I see some 2s coming in. I see no experience. Charles says 2. David says 2. Cameron says 3. All right, so usually I would have a percentage to show you on the screen, but I'm seeing mostly 1s and 2s, some 3s. So if you are in any of those areas, number 1 or number 2, don't worry. Don't feel like you're going to be overwhelmed by this, even though the title says credit spreads. Don't get freaked out. I'm going to help you through it. All right. If you are like a beginner or you have no experience, I want you to write down 4 words. All right, so this is where that pen and paper come in. Write down, I can do this. All right, write down those 4 words, I can do this, all right, because you can do it. I can do this. All right, because you really can and you really should know these trades. Okay, because there's something that anybody can do. And I know you could do it as well. These trades are really important because as anybody, we all have recurring bills. And whether it be things like a mortgage, could be a cell phone, it could be a car payment, you name it, right? You have all these recurring bills, and especially when you get towards retirement, especially retirement, and you don't have that job anymore, unless your job had a pension, that income basically stops, and you don't have that income stream. So having a way to generate income is important to help you continue to pay those recurring bills. And people think retirement is an age. It's not really an age. It's at a point where you know you've got the income to be able to sustain you and do the things that you want to do. But people, they get worried that, oh man, I might not have enough income. In fact, you probably see these things on the news. Like this was on CBS not that long ago where they did a whole like a 30-minute or 60-minute segment on why Americans over 65 still have to work. And so we want to be able to get you into a spot where you're not one of them. Right? You are in a spot where you have either grown your account to the point where you're able to retire, or you're at a point where you're able to generate enough income from your investments to do the things that you want to do. All right, so this is going to help you get that steady income. Okay, like a tap you can turn on or off whenever you want. All right, so I do want to kind of talk about the elephant in the room, because you might be thinking options are risky. I actually talked to some people over the weekend, because I did a video about options this weekend, and people responded to me on YouTube and they're saying, oh, but aren't options risky? And so that is a real thing that people think, and you might be thinking the same thing. You might think, oh, they're super complicated. You might think that only professionals should be doing them. My goal, or one of my goals today, is to help you understand that the answer to each one of these is no, no, and no. Okay? These are things that actually involve less risk than buying a stock. Right? The way this trade is set up, it's called a credit spread. It involves less risk than actually buying the stock. Less margin is required than buying a stock. So you could do it with small and large sized accounts. It's completely scalable. So you could do it with small accounts, $5,000, $10,000. You could do it up, $100,000, $200,000 accounts, $300,000 accounts. You could do it with small and large sized accounts. All right. And these trades, the way that we're going to set them up, all right, they will, on a base level, I'm going to say, if you just right out of the box, it'd be a 60% winning trade percentage just based on probability. But the way that the checklist that we're going to go through at the end of today's webinar, that's where we're going to start to stack probability in your favor, and it'll turn what would have been a 60% probability into 70 to 90% winning trades. In fact, the video I made over this past weekend to our clients show that, over the past 2 months, I've been at 90%. So you can be up at that level when, you got a nice trending market, but over time, you're probably going to be around that 80% level, which is still really good. All right, especially on lower risk trades. These trades, of course, can be done when the market's going up. Right? We've had a nice uptrending market for a while now, ever since the lows put in back in April of last year. And this is an image of what that looked like. But the cool thing is, and we were just teaching our clients about this earlier today, is that these trades can help you make money when the market's going down. One of our clients asked, hey, when you get a down signal, can you do this? So yes, and that's an important part, because when the market's going down, some people, either they watch their gains go away or they go into cash and they have nothing to do. Well, these trades you could do when the market's going down. We will look at the trades for that as well today, and they work when the market's going sideways. So I want you to always remember that you can do this. Okay? So here are the objectives for today. Okay? Objectives for today. Number one. Right? Number one is that I want you to understand the trade. So I'm going to help you understand the trade. Right? Even if you've never traded options before. Okay? Even if you've never traded options before, you're going to be okay. Okay? Because what I'm going to do in this part is I'm going to draw it out for you. Okay, so I'll draw it. I like to kind of draw it first. I'll draw it out, and then what we'll do is then I'm going to walk you through it, one step at a time. After we draw it out, so you can understand the concepts, after that we're actually going to look at some examples, and this is when we're going to actually look at some stock graphs and actually start to put the theory to actual trades. All right, and then number three, we're going to look at case studies of actual trades that we did, so you can actually see what has happened. So I like to call it building layers on your knowledge sandwich. So we're going to do a little bit, then add a little bit more, and then add a little bit more. And then by the time we get towards the end, we'll be able to put that together into a checklist, which is the culmination of everything that we go through. And we'll talk about some action items, and that's where we will say, all right, you want more information? Go here. Okay? So to put a face to a name, that's me, Brian D'Amico, investing coach here at VectorVest. It's not just myself here as a lone instructor. I'm actually part of a bigger education team. So some of you are familiar with VectorVest, some of you are not. I just want to let you know that here at VectorVest, we've got several people on our education team to help you become a better, more successful investor and help you retire with peace of mind over time. All right, some of us are actually in the background working in answering your questions in the chat. All right, so let's get right to it. All right, so the first thing we need to talk about is the difference between what a standard trade is, that's one you probably do all the time, right? It's a standard trade. So we're going to talk about the difference between a standard trade and an income trade. So a standard trade, that's one where you're only going to make money if you are right. Okay, that's the tricky thing, right? When you set up a trade and you have to be right on direction, which means based on probability, it's 50-50, right? It's either going to go in your favor or it's not. What we're going to talk about today is what's called an income trade. Okay, an income trade is one where you can make money whether you are right or wrong on direction. And a lot of people wonder, well, how on earth is that possible? How can I make money if I am wrong on direction? Okay, so this is what I want to start to draw it out for you here. So this is what like a standard trade, like a typical trade would look like. Let me get my pen. All right, so you're going to find a stock that you like. Now, this is a standard trade, one that you go out and buy a stock, right? You're going to find a stock that you like. And here at VectorVest, we like to look for stocks that are slowly and steadily climbing, that are in an uptrend. And what do? Well, a standard trade is one where you buy shares of it at the current price. You say, all right, well, that's where I'm going to buy it. And what is your hope? Well, your hope is that it goes up. If it goes up, you make money. Right? That's the only way you make money. If it goes sideways, well, yeah, you didn't lose money, but you also didn't make money. Okay? So your money is basically tied up. So I'm just going to kind of put an X there. And of course, if it goes down, that's bad because you're losing money. So that is a standard trade. I think we're all pretty familiar with that. But let's talk about the difference between that and an income trade. So it all starts with the same stock selection process. The stock selection process is if you're bullish, you're going to be looking for a stock that is in an uptrend, good fundamentals. It all starts with the same stock picking process. But now if you're going to do an income trade, instead of buying it at the current price, what you're going to do is you're going to pick a price where you don't think the stock price will drop to. Okay, so if the stock is here, and a little bit later we'll talk more about how you pick this price, but let me just say right now, it's based on probability. There's things out there that'll tell you where probability says it won't go, because obviously you could say, well, I don't think it's going to go way down here. All right, well, yes, obviously it's not, there's probably a 0 or like a 100% chance it's not going to get way down here, or a 99% chance, but we got to have a little give and take, because remember, we're going to, in this type of a trade, we're going to be getting paid. So there's got to be some sort of middle ground. So we're going to pick a price where we don't think it's going to drop to. Okay, so let's say we're going to pick a price like right here. Right? Maybe you're looking at support and resistance, and on my little doodle here, you see, oh, it's kind of hitting support and going back up. I know it's a kind of a rough drawing, but just get the idea. Is you're going to pick a price where you don't think it's going to drop to. Okay? Don't get hung up on all kind of the back end stuff and what's going on. Just understand a concept right now. Is you're going to pick a price where you don't think it's going to drop to. And I want you to just understand that you're going to get paid up front because you're going to sell this to somebody. You're going to say, all right, it's almost like you're taking bets almost. Like somebody is placing a bet that they think it's going to go a certain direction. And you're going to say, all right, well, I'll take that bet. And you're going to be the house. And you know what they say? The house wins over time. You're going to be kind of like the casino. And because probability is stacked in your favor, you're saying, all right, well, I'll take your money. As long as the price stays above this line, you can keep money. So think about this. In an income trade, the stock could go up and you make money. Right? I'm going to put a check mark to be consistent. It could go sideways and you make money. Now, it could come down and you could still make money. Now, if it comes down too far, too fast, that down here, this is where you lose money. Okay, but you could still be making money as long as it's above this line. So that's the definition of an income trade. It's one where you could be even wrong on direction and still make money. And of course, this could be done when the market's going down. So let me just split this. You just find a bad stock that's going down and you just do the reverse. All right, you just pick a price up here where you don't think it's going to go up and it could continue to go down, you make money. It could go sideways and you make money. It can even reverse and start to go back up and you could still be making money. Now, of course, if it goes through this line, that's the losing part. Okay, so remember, you're getting paid up front. You're basically like taking other people's bets and probabilities on your side that you're going to win, and the house always wins in the end. All right, there's a chance that on your very first trade, maybe you don't make money. Yep, just like if you go to the casino, the gambler might win on his first hand of blackjack. But over the span of time, the house wins. Okay, so this trade is called a credit spread, and we're gonna talk about this trade in today's webinar. There's two types of credit spreads. We are going to talk about them both today, so buckle up. All right, so the first one is a bull put credit spread. The other one is a bear call credit spread. All right, like I said, we're going to look at both of them, and hopefully you can see by the names, bull and bear, up, down. Okay, so let's break it down. Now, if you're like me, when I first started, I was freaked out by those terms. All right, I was freaked out by these terms. A bull put credit spread, I said, forget it. I'm not even going to learn this. This is so confusing and complex. Until somebody sat me down and they said, whoa, 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 it's not that complex. Just break it down word by word. So there's 4 words: bull, put, credit, and spread. All right, so bull means you're bullish. Okay, that lets you know it's a bullish trade, and you should only do a bull put credit spread when the market and the stock are in an uptrend. All right, so this trade is done on an uptrending market or during an uptrending market on an uptrending stock. All right. Next up is put. Well, this means this trade only involves using puts. I will talk more about this in a little bit. Just understand you're going to sell one put and you're going to buy a put at the exact same time. Your broker sees it as one trade. You don't have to worry about the back end stuff. You just kind of click on the 2 things you want. You say, I want to sell this one and buy this one, and boop, off to your broker, and the broker does them both as one trade. All right. 3, credit means you're getting paid. Like anytime you receive a credit, that means you're getting paid. Spread, that's the difference in the strike prices. Remember up here that you sell something and you buy one thing. The difference between, it's called the strike prices. The difference is that's the spread. And it'll make more sense as we look at the examples. All right, so let's go back to our example from before. And let me get my pen back out. Do you remember earlier we had that uptrending stock? So I'm going to doodle that out for you. I still want you to keep in mind, when you're bullish, you're not going to be looking for these speculative stocks. You know, a lot of people in our chat with our clients today, they're like, oh, what about GameStop? Because, you know, the stock went from like $40 a share or $10 a share, went up to $160. I mean, this stock was taken off. That is not the type of stock we are going to do income trades on. I want you to think prudent stocks, smooth and steady, stocks that are in uptrends, that are not crazy in price. That's why this can be a retirement strategy for you, because you're picking good stocks at the core. All right, so if we look at this example, you've got a good stock going up. And remember, you're going to pick a price where you do not think the stock is going to drop to. And it could be based on things like support, levels of support. We use a thing called probability. Any broker, when it lists an option chain, will show this. But we're going to pick an area, let's just say right here, where you don't think the stock is going to drop to. And remember, this is going to be the put that you sell. So I'm going to write over here, sell put. Now, remember, you're not going to just go to your broker and sell a put all by itself. You're going to do this, what once I'm done here, it's all going to be one trade with your broker. So at first you sell this put and you're getting paid. And I'm going to show that, meaning you're going to get money. And I'm going to list that as $2. Okay? Now you might be thinking, those of you who have a little bit of knowledge with options, you might be thinking, all right, if I just sell a put all by itself, there's risk involved because when you sell a put, you're taking on obligations to buy a stock. And let's say the stock drops way down to here. Let's just put a little dot down here. If it drops down to here, well, you have obligations to buy it at this price. All right, so you don't want to have obligations to buy it up here if it's trading way down here. So what you need to do is to make this a low risk trade, you are going to buy a put as insurance. Like, think of it as insurance. It's protection. So this put here, and then down a little bit below it, usually about a strike below, you're just going to buy a put. And remember, these two things happen at the exact same time with your broker. When you go to your broker, you click on this one, you click on this one, and they're both done at the exact same time. So anytime you buy something, okay, anytime you buy something, it costs money. All right, but this put, I just want you to picture this. It's only going to cost you about $1 worth to buy that one. So if you think about this, just think that like these two cancel each other out, and it leaves you with a net credit. Right? It leaves you with a net credit, and that is your payment. So far, so good. So if the stock goes up, you make money. If it goes sideways, you make money. As long as it stays above this line, you make money. And our goal is, we're not going to try and get all of this money. We're going to target like half of it. Okay? We're not going to hold this thing to expiration. We're not going to do any of that. We're just going to target half of that and then move on to another trade. Okay? So we're going to continue. We're going to look at some examples with real stocks coming up. So let's go through, look at with Costco here, the difference between just buying the stock, you know, the typical trade versus this trade that we talked about as an income trade. So here's Costco. In this example, remember what I said earlier. It is a beautiful looking stock chart going up in price. It is a fundamentally sound company. All right, so you're going to start with that at its base. In this example, you can see Costco is trading, at the time I took this screenshot, it was trading at 207.98. Now think about if you were to just buy shares of Costco. All right, if you were to buy shares of Costco, let's say you did 100 shares. Well, what would that mean? Well, it would cost you a little over $20,000. Okay, it would cost you $20,000. And the only way you make money is if Costco goes up. Remember that was what we talked about earlier as a standard trade. And you've got $20,000 tied up, which also means technically $20,000 at risk. Okay, that's the margin. Well, I wouldn't say it's a margin requirement. Your broker probably has a formula for that. But let's just say you have $20,000 at risk because Costco could go to zero. Like, I'm not saying Costco is going to turn into Enron or anything, but that's, you know, you've got $20,000 at risk. All right, that's that big amount of risk because Costco could go, that's all that risk down there. All right, so what we're going to take a look at here is that income trade, and I'm going to build it piece by piece. First off was if you just sold a put. Like if somebody said, well, I don't think it's going to go down here, and they just sold a put. Well, yeah, technically, you know, if it goes up, you make money. If it goes sideways, you make money. If it goes down, you could still make money. But if you just sell a put, it's called selling a naked put. Right? You receive money, right? You receive money per contract, but you still have all of this risk because remember, Costco could drop all the way down to 180. And you have obligations to buy it up here at 205. You don't want all that risk. The trade we are looking at here today, called a credit spread, reduces that risk down to that because you are buying insurance, right? You're buying a put here, which I want you to think about this. It caps your maximum loss. It shrinks your risk. Now, just like before, I said when you buy something, it costs money. You're going to pay $121 per contract for this insurance. So if you do the math, 246 minus 121 is $125. So you just would make $125 per contract. Okay, and since this is just a $5 spread, the worst thing that could happen to you, the worst case scenario, is a $5 difference. Like you'd be obligated to buy Costco. I shouldn't even say that. You are never going to be buying in this trade. You never have to worry about having to exercise these options or buying the stock. I'm just trying to help you understand kind of the back end of what's going on in this trade. Worst case scenario is there's a $5 risk, but you just received $125 per contract. So the maximum risk on this trade is only $375. Compare that to your maximum risk on that other trade of $20,000. All right, that's a big difference. All right, so this is your bull put credit spread. Now you can do more contracts if you want. So some people say, well, $125 is not really worth my time. You can do more contracts. You could say, all right, let's do 10 contracts and I'm going to generate $1,250 and your maximum risk is still only $3,750. That's still a whole lot better than $20,000. Okay? That's still palatable, right? And we're going to target half of this. So if you make $625 on this trade, you would walk away happy and move on to the next trade. So let's look at what actually happened with Costco, because this was a real example. So the trade was placed over here. Costco actually went up for a couple of days, came down for 6 straight days, and then went up for 3 days. During that time, Costco only rose 1.4%. So imagine if you spent $20,000 and invested in Costco, you just made 1.4%. All right, well, instead of doing that, if you did the credit spread like Frank here, Frank is a member of our Ultimate Retirement Group, and that's the group where we basically place these trades every week with our clients. All right, so every week we place these trades, and Frank took this trade that we're talking about, and now he must have done, let's say I think he probably did about 15 contracts because he walked away with a net profit of $955. All right, so the stock went up 1.4%, and he just made $955 on that income trade. And I don't know if you saw this, that was a 16% return on the amount of money he risked, versus a 1.4% return if you had just bought the stock. Right? And look, the stock basically went nowhere. The stock basically went nowhere, and you made income and you moved on. So I'm going to ask you a question here. This is where we interact a little bit more in the chat. If you could be making money even when you're wrong on direction, like in Costco, you weren't really right on direction because the stock went nowhere. If you were like Frank and you were able to make a nice, sweet $1,000 paycheck and the stock went nowhere, how would that feel? Steve, you're the first one in. You typed in fantastic. I see good from Donald's. Terrific, says Norman and Edward at the same time. I see great, a lot of greats coming in. Judy says, pretty darn good. Yeah, I'm telling you, like, it feels great. And these trades only last typically between 7 to 11 days. Right? 7 to 11 days, and the trade is over and you get to move on to the next trade. Right? It feels good when you make money and the stock really doesn't go very much and you make money and then you can move on to the next trade. All right? So that was our bullish trade. All right? And what I'm going to do is, if you do have questions, about the kind of the makeup of the trade, hang tight on them until we get to the end of the session, and then what we'll do is we'll try to put it all together into one Q&A portion of the webinar, because I want to make sure we get through the bearish trade in the amount of time that we have today. All right, yeah, Jordan just typed in. He said, "I'd feel amazing if this would happen." All right, well, let's take a look at the bear call credit spread. And if you had some questions on the bull put, maybe seeing it from the other side of things, like when the market's going down, it'll help kind of solidify your understanding a little bit more. Okay, so with a bear call credit spread, we're going to do the exact same type of thing. We are going to look at each of the four words: bear, call, credit, and spread. All right, so bear, what does that mean? Bear means you are bearish, right? It means it is a bearish trade. So you are only going to be doing this on a downtrending market, right? Downtrending market and a downtrending stock. Okay? So only do this when the market's in a downtrend. Now here at VectorVest, I don't know, I think a lot of you use the VectorVest platform or the VectorVest software. We've got market timing signals in VectorVest to tell you when the market is in a downtrend. One of our best ones is a nice intermediate signal called the DEW timing signal. It's a great intermediate signal. So whatever timing you use, you want to have something that tells you the market is in a downtrend. And if the market's in a downtrend, you're then going to look for downtrending stocks. Basically stocks that have bad fundamentals, like negative earnings, they're hitting lower highs, lower lows. You're going to find stocks that you think are going to continue to fall. All right, what does call mean? Well, you're only going to use calls. Remember in the other trade, we only used puts? This one, you're only going to use calls. Credit means you get paid. Spread is the difference in the strike prices. All right, so let's look at it here. So let me get my pen back out. And this time, remember, we're bearish. So we're going to find stocks. Now, these could, remember when you're in a downtrend, downtrends happen after uptrends. Right? So you could have a stock that might have been going up, but now, with the market going down, it could be going down. So you want to find stocks that are going down in a down market. Ideally, these would be stocks that have negative earnings, falling earnings, things like that. You've got a bad stock. So this stock is going down, and just reverse your thinking. If a stock is going down, what do you think it's not going to do? Let me grab a drink. If a stock is going down, you think it's going to do what? Continue to do what? Yeah, David's like, not go up. Toby says, go down, go down. Yeah, all right. So if you are bearish, you're thinking, probability says, because the market is in a downtrend, that this stock is going to continue to fall. So what you're going to do is you're going to say, all right, I think it's going to continue to fall. I don't think it's going to go up, but just in case, I'm going to pick a price where I don't think it's going to go to. For example, here. And you would use things like areas, levels of resistance. Okay? So we're going to pick a price up there where you don't think it's going to go back up to. Yep, Marie, Jordan, you got it. So you think it's going to continue to fall. Now this is just like before. You're going to start off by thinking that's the put, so not the put, that's the option you're going to sell. And in this example, this is a bear call credit spread. So this one uses calls. So you are going to sell a call. Now you're not going to ever want to sell a call all by itself. Most likely, most of you, your broker won't even let you, because that's a naked call and there's unlimited risk. So you're not going to sell a call all by itself. When you set up the trade, you're going to sell a call, and at the exact same time that you sell a call, you are going to buy a call up here, and this is your insurance policy. you do both of these at the exact same time with your broker, and then the broker just takes care of the rest. And just like before, this one you get money, let's say $2 signs. When you buy this call, it takes $1 sign worth. Those cancel out, and you're left with this. And let's just make a little money bag, right? You're left with the difference, and you get to keep money from that money bag as long as the stock goes down, goes sideways, and it could even come up a little bit. Now I'm going to add a layer to your knowledge sandwich here. If it goes up and it hits this line, that's your exit. Sorry, that was got a little sloppy with my drawing. That's your exit. If it hits that, you're out. That's it. You lose. In that case, you would lose money. This isn't a 100% thing. In that case, you lose money and you move on to the next trade. But probability says you're going to make money more times than you won't. All right? And you're going to make money in more scenarios. All right? So now let's look at an example. This is an example of Facebook. It doesn't matter when this was. It could be stock XYZ, right? It doesn't have to be Facebook. But just like I drew it out before, the stock was going up, the market and the stock turned around. Maybe earnings caused this big gap. But you see what's happening here? Lower highs, lower lows. This thing is in a downtrend. Okay? So you are bearish. You are bearish. That's what it says. You're bearish. Okay? And at this point, you just need to determine where Facebook is not likely to go. All right, so this Facebook is currently trading at 157. Let me erase all my stuff. Is at 157.25. And you've got to determine where you think it's not going to go. Okay? So the market is bearish, the stock is bearish. Where is Facebook not likely to go? And I'm going to ask you in the chat. This is where let's get a little bit more interactive with this example. In the chat, let me know where you think Facebook won't go. So here's 157. There's like 165 is here. This is 165. This is 170. This is 175. This is 180. All right, so my chat box has got 185, 170, 175, 164, 175, 170. I saw some high numbers sneak in there, like 195, some 170s. Okay. All right, well, remember earlier what I was saying. There's a little bit of give and take here. Right, there's a little bit of give and take because, remember, you're getting paid on these things. So the amount of money that you would get paid on this one might be like $4 signs. All right, this one might be $3 signs. Whoops, I didn't draw a fourth one. I'm going to just do S's to be faster. This one might give you $2 signs. This one might only be $1 sign. If you go way up here, this one might not even be a dollar sign. It's like a little bit. You get paid a smidge. So what you want, you got to have some sort of give and take there. So what we did, whoops, hold on, hit the wrong button. Hold on. Got to go back to my Facebook example. You get to see my snow background though. Where did Facebook go? There's Facebook. All right, so you Bill's like, I love the mountains. That's me. I'm broadcasting live from the Himalayas. Says Sohail. All right, so this is our Facebook example. It was there. All right, so remember, I wish I still had my doodles on the screen, but we did the 165 because based on probability, it most likely won't rise above 165. That's where we're going to sell the call. So remember earlier I had all those dollar sign things, like there was $4 signs here, 3, 2, 1. Well, this was a nice mixture of we got enough dollar signs and it gave us enough probability that says, well, Facebook won't go up to that level. It was a nice balancing act. All right, so that's where we sold the call, and it gave us $455 per contract. Like, think $4 worth. All right, so that $4 worth. Well, we had to get our insurance, all right, and our insurance leg was here. That insurance cost us $3. All right, so $455 we received. It costs us $310 to get our insurance. If you subtract the two, all right, that's where we're going to come up with the difference, which is $145. All right, that's the credit that you just received. All right, that's the credit that you received, $145 per contract. Okay. Now you could do more contracts like we talked about before. If you did 10 contracts, you just generated $1,450. And we're targeting half of that, which means you'd like to get $725 out of that trade. Let's see what happened. Facebook actually dropped. In this example, you actually were right on direction. Facebook fell by 7% over the next 2.5 weeks. All right? But in order to make money on that, some people would have had to short Facebook. Right? And shorting's not always the most fun thing, because there's unlimited risk when you short the market. So instead, we're going to do a bear call credit spread. And on the amount of money that you risk, you just made 20% on your money. So the stock went down 7%, but you just made 20% on the amount of money that you risked. All right, so let me ask you this. If you had an income source, even in down markets, what would be the impact? All right, so think about what you do now when the market's going down. What do you do now when the market's going down? Do you do anything? Like, do you just try to protect yourself, make sure you don't lose money? Do you just watch your portfolio sit in cash? And then think about what would be the impact if you were making money when the market's going down. Mark says, I'd be happier. Yeah. I'd make more money. Massive gain possibility. Yeah, you continue to grow. You continue to stair-step your portfolio up. So now, like I said in the very beginning, I want to look at some case studies. So this is a case study on the SPX. Now, keep in mind, these are examples from the past, but the idea is I want you to understand kind of the concept here. So you can think that this happened not that long ago, even though the S&P is no longer at 2,800. If you were to look at the S&P is in an uptrend. So you would do the same type of thing now. All right, so the S&P is going up, and you think, all right, well, I am bullish. All right, so you would, like Doug here says, instead of bought, he actually sold his first credit spread. Now, he did way down here. He did a bull put credit spread. The S&P started up here. Let me get my laser pointer. Look at all of this space that he had to be wrong. The S&P could go up, it could go sideways, it could even come down. These are levels below this area of support. That is a lot of space that he could have been wrong. All right. In the next example, I'll see if I can get you more involved. I should have tried to get you involved on this one. Well, what happened? The S&P went up just for a few days. The S&P rose 1%. And Doug typed into our private Facebook group, he said he closed it for a gain of $1,000, right, in that amount of time. So that was a $1,000 gain in 5 days. Okay, 5 days. So the market only moved. The market moved 1%. And all he did was trade the S&P. Some people say, oh, can I trade just the indexes? Well, yeah, you can. We trade the indexes a lot. And you don't even have to look for stocks. All you have to do is, do a trade on the S&P and pick direction. And with our system, we said, hey, the market has an up signal. We're going to get into an S&P bull put spread. This is one of the most popular trades that we teach our clients. So you could just do the exact same trade I taught you today, a bull put credit spread, and just do it on the S&P. Doug made $1,000 in 5 days. All right, so now let's look at case study number 2 with Alibaba. All right, stock is in a downtrend, right? The stock was currently trading, what is that, like a 139-ish? In the chat box, I'll give you 10 seconds. Where do you think it's not going to go? $200. Yeah, 200's way up here. Come on. You got. Remember, the dollar signs I drew before? All right, so I see 135s, 140s, 150s, 130s. All right. Well, it's got to be, this is a bear. We're going to do a bear call credit spread. So we got to pick something above where the stock's price is. It's currently at 139. Where are we going to go? Let's see. Manoj typed in, he did a bear call spread on Alibaba at 155, excuse me, 150 and 155. So right here. Look at all that space. The stock was at 139. It could have a $10 leeway before he had to exit. All right, now he received $1.05 per contract. So that was his spread. Remember, this is the one he sold, this is the one he bought. I put it in a box like this so you knew that it was one trade. It was one trade. He then later typed in, I'm out with my 50% profits. Remember earlier I was telling you that's what we do. We take half the profit. So the stock dropped 3.5%. He made 50% on the credit in those 2 days. All right, so I just want to have you make it a little bit more real because I don't have it on the slide here. If he didn't tell us how many contracts he did, but if he did one, let me get my pen. If he did one contract, that would have been $100, like $105, and he made half of that in 2 days. That's $52. Well, $105 might not be a lot, but he could have just done 10 contracts, and he would have collected $1,050 up front, and in 2 days, he would have walked away with $525. Okay? And let's look at just one more. I believe we just have this one more. Again, this is a bullish trade. So I went back to a bullish trade, this time on a stock, not the S&P. So this is OLED. Stock's in an uptrend. This is what we like, a stock that's going up. It's at 194.20. Where do you think it's not going to fall to? So we got places like 180, 170. Don't you dare in the chat box type in 100. I will come over to your house. I will find you. I'm just kidding. All right, so I'm seeing 180s, 170s. All right, this is what we did. We did the 180. So anybody who said 180, that's what we did. It was the best combination of risk versus reward. If we would have sold the 170s, we wouldn't have got as much credit, right? And it wouldn't have been a good trade. All right, so Frank, so here's Frank again. He closed his OLED bull put spread at 50% profits. Now I know you can't see this image because this little number right here, this is where he typed in or showed us his gain. So I zoomed in on it and found out what it was. It was the stock, this stock actually went up, which is exactly what you thought it was going to do. And on his little screenshot here, it was $1,400 in 13 days. Typically, the trades last 7 to 11 days. All right, and that's what we got over here. Now, I want you to think about this. Our system that just trades the S&P is typically around 85 to 87%. So let's just round that up to 90%. All right, we're going to look at a couple of examples. So 90% of the time, I want you to think, all right, I'm going to make a 7% gain on my trade. The time that it loses, and you will lose every once in a while, don't think you're going to make money on every single trade, it'll be a 14% loss. So let's look at this. Let's do some math. If you did 10 trades per month and you're at 90%, that's 9 winners, and let's say you lost 7%. And let's just use nice round numbers. $700 you lose. 9 winners, that's $6,300 gain. The one loser, you lose $1,400. That's a net gain of $4,900 per month. Now you might think, all right, well, 90% is pretty high. So let's run the numbers, something that might be more realistic for you. Over time, let's say you're at 80%, which is pretty standard, very doable. That's what, we've definitely seen that. Our clients have been seeing that. Same 10 trades, 8 winners times 756 gain, 2 losers times $1,400 loss. Still a gain of $2,800 by the end of the month. All right. So I want to ask you this. What would an income system like this allow you to do? Where at the end of each month, on average, based on probability and just basically setting up the trades using the numbers, where you're just, even if it's not 2,800, if you just kind of slowly, it's like a little snowball. Add a little bit, add a little bit, you add a little bit more, you add a little bit more. Yeah, Michael's like, I'd be very happy with 2,800. Consistent growth. That's the key thing, Donald. Consistent growth. Mark says I'd be able to travel more. Yeah. Exactly. So let me give you this checklist. I promised you a checklist, right? Here's your checklist. All right, to successfully place credit spreads, you need to follow a system. All right, don't just make up rules willy-nilly, right? You got to have a system. All right, the first part of your checklist should be, it's always got to be determine market direction. Right, determine market direction. So you got to have something that tells you whether the market's in an uptrend or a downtrend. Okay? We have a signal here at VectorVest we like to use called the DEW. All right, so number 2 is select a stock. So if it's a bullish trade, you want to find a rising stock with good fundamentals. If it's a bearish trade, the opposite. All right. Third, you want to set up the trade. Where is the stock not likely to go? All right, we were looking at that today. Where is it not likely to go? So you could first just think about that. When you're looking at a stock graph, pick a price where you don't think it's going to go to. And then when you go to your broker, you can check the probability. You can check the credit, set up the trade. We have rules built in. Now, if we had more time today, we can get into the exact credit that you want to look for the amount of risk. All right. And then after you set up the trade, you want to plan out the trade. Now, I did talk about a couple of these today that we're going to take profits at 50% of the credit you receive, right? And then you just move on to the next trade. Okay? And, oops, there we go. And you want to adjust the trade to minimize losses. Now, you don't have to adjust the trade. We didn't have a chance to talk about this today. This is not mandatory. A lot of the trades I've done over the last 2 months, there was no adjustment needed. Right, the system that we teach, you could set up trades where there's no adjustment needed, and it's just you close it if it goes against you at the short strike. Now, you might not know what that means. Let me just say, remember the stock that was going up and we sold this one and bought this one? If it came down and hit that, that is your short strike and you exit. All right, and then lastly, you just go to your broker and place the trade, and remember they're both done at the exact same time. All right. And now, like I was saying before, I just saw this pop into the chat box. You could do this with a small account. You could do it with like 3,000, 5,000 in your account. Ideally, 10,000 or more. And our target is 3% per month that you'd be making. So if you have like a $10,000 account, what is 3% of that? It is what, 300? If you have a $100,000 account, that's $3,000 per month. Right? On the base level, our coaching clients, we have a coaching system. They've been around the 5% level for a while. All right. So what I wanted you to do is, you've got these 5 things in the chat box. Let me know, of those 5 things, are you 1 out of 5? Do you have all 5? Do you have a way? Do you know how to do all 5? Are you at 4 out of 5? 3 out of 5? You know, where are you? Glenn says 4. I see 2, 3, 4 out of 5, 3 out of 5. Yeah, here's the thing, if it's anything less than 5, we need to get you to the 5, because like even if you, let me go backwards one, even if you are these 4, and if you don't know how to place the trade with the broker, there's a problem. Like you can really mess things up if you don't know how to place it with the broker. If we had more time, we actually have a full course, which I'll tell you about in just a second. We show you how to go to the broker and place the trade. All right. So this is where I want to give you the action steps, because at the beginning I said, hey, we only have an hour today, and we're almost at the hour. We only had an hour today, and if this is something that intrigues you, right? And hopefully, I think based on what you're typing in the chat box, it is like you really say, oh wow, this is something I really want to do. And I'm telling you, it is hugely beneficial if you know how to do this. So if it's all right with you, I'd love to show you how to take the next step. All right? The next step, I really recommend, if you really want to learn this and get yourself ready to go, and basically in the next less than 2 months, we say 7 weeks, you can actually go through this entire course in a couple of weeks if you wanted to, but we will walk you through over a course of 7 weeks how to do this on your own. Yeah, Anthony's like, tell me the next step, please. This is it, the options paycheck course. Hands down, it's the best course. I already see some people in the chat box say, I'm already signed up for this course. Right? So I'm confident that I can say this is the best course out there. You know, we see emails like this, ton. I'm actually going to skip to Joe sent us 2 emails. The one he sent us this past October, which means he had just traded through the coronavirus crash and everything. He says, hey, Ron, you know, by the way, Ron is the one who teaches this course. He says, I'm writing to thank you for teaching this course. I took your class last fall, and I wanted you to know my results for the last 10 months. He says, I keep a journal to document every trade. He says, I've profited on 239 trades out of 350. 68% winning rate. So, you know, he's not up at the 80%. He's at 68%. And he has already profited over $100,000. And he says, what's more exciting, right? Since his knowledge and experience have grown in regards to taking really good risk to reward trades, which is what we teach in the course, he's profited over 50 grand in that last 6 weeks. And his success rate jumped to 78%. All right, he's like, I want to thank you again for teaching this simple but very effective system. All right, so let me walk you through it. Just that way you have a pretty good idea of why we're confident that if you take this course, you're going to know exactly what to do. It all starts in the first module. We are going to build a strong foundation. Right? Because a lot of people try to go out there and they try to build a option income system on like in a beach of sand. And they don't dig deep. We're going to dig deep. All right, we're going to give you a nice strong foundation, and the outcome you're going to get from module 1 is you're going to know exactly how calls and puts work, so you can confidently use them. All right, modules 2 and module 3, we are going to show you the 3 trades that we use: bullish, a bearish, and a neutral trade. So you know what to do when the market's going up, what trade to do when the market's going down, and what trade to do when the market is going sideways. Module 4, this is where we're going to show you how to select the right stocks for these trades. All right, we're going to get in there and we're going to show you, instead of wasting hours of your life trying to find the perfect stock, we're going to show you exactly how to do it, whether it be a bullish, a bearish trade, or a neutral trade. Then we're going to show you how to set up the trade. This is where we're going to say, all right, you've got the right stocks. Now we got to find out which ones make the best option trades. We're going to show you how to set up the trade. All right, we're going to say, all right, this is the right expiration to pick. This is the right strike price to pick. This is how to set up the trade the right way. After that, I'm going to teach you how to manage it. All right, there's some base management, which I gave you today. Then there's some of the other things you really should know, which is how many contracts you should be doing the trade on based on how big of an account you have and based on the risk to reward of that trade. We're going to show you how to do all that. We're also going to show you how to mitigate a trade, which would, if you have a loser, it could show you how to reduce the losses by about 30%. All right? And then lastly, we're going to take you all the way to the broker and show you how to place the trade with the broker. We'll give you step-by-step checklists. That way you could print it out, because we do not want you to miss a step. All right? You can, this is especially important if you're new to this. You want to feel like you're not missing anything. So you're going to print out the checklist and just go check by check by check and make sure you have got everything covered. Before I give you the price, I want to let you know it is 100% money back guarantee. You can even go through the entire course. And if you're not satisfied that we taught you an income system, just let us know. We'll give you all your money back. All right? But we ask that you go through the course because we know it works. And if you do it, it'll work for you. You just got to do the work. All right? When you do this system, you'll be learning the system that generates, on average, 3% per month. That's like 36% per year. Our clients, I mean, in our coaching, I mentioned Ron Wheeler. He's generated about 50% the last 2 years. All right? So it could be much more than the 36%. Okay? And these are... This is the real result. So I see somebody says, how do you verify these results? Because we actually have our account where we've been placing the trades. So that's what we've done. And then we've got tons of case studies and testimonials that have come in. And some people actually show us their brokerage statements. All right. Before I tell you anything more about it, one quick thing. This is not a get-rich-quick scheme. If you think it's a get-rich-quick scheme and you're ready to become a millionaire tomorrow, we actually don't want you in the course. All right? We want people who take it seriously and realize that you are learning an income system that'll benefit you for the rest of your life. So this is serious, and it requires some effort on your part. All right? It's for serious people. And if you're serious about it and ready to do the work and get results, then this Options Paycheck course is perfect for you. You're going to get the entire course that I just walked you through. All right? You're going to get it delivered live to you, as well as the recorded version. So as soon as you sign up, you will have the entire course available to you via recording. But we will also, I shouldn't say but, and we will teach it to you live starting next week. All right? If you're worried that it might be too much for you, like, oh man, I don't know what stock to do it on, that's going to be really hard. Well, we're going to include this bonus. We call it the SPX Paycheck. This is where we're going to take the entire system, and you could do it within 15 minutes a week, because you're going to do it all on the SPX. One trade type, one ticker symbol, one rule, one profit rule, one stop criteria. It's simple and easy to do. In fact, this has accounted for like 60% of all of our gains. All right? And this is something I actually sat down with my daughter when she was 14, and she's like, okay, this is the rule. This is the rule. She wrote it down in her spiral notebook, and then she was able to do it herself. All right? You'll get 7 live mastery sessions. So in addition to teaching it to you live, Ron Wheeler is going to be with you every single week. We're going to let you into our private Facebook community. Now, if you don't like Facebook, you don't have to join it. But if you do, you can join the Facebook group. It's a nice community. You can interact with your fellow students. Plus, Ron will be in with you for a full year after the course ends. All right, so you get an additional 12 months of support from Ron with a monthly live Q&A. Mike, yeah, I love this. I'm gonna have to put this in the chat. This just popped into my chat box. Michael, hold on, let me just show it to you. Ron Wheeler is an awesome instructor and mentor for the course. Best course I've taken. I look forward in the future to take a refresher course as reinforcement. Best investment in yourself. Thank you very much. That just came into the chat box. So thank you for sharing that, Michael. So speaking of the course, you're going to get 7 weeks of access to Ron's coaching. This is awesome because you'll be able to sit there with Ron and he can show you in real time how he finds, selects, and sets up his trades. You're going to get 7 weeks of access to the software. All right. Those of you who were worried about whether you're qualified enough for options, we will also include our options foundation course. So if you order today, you will be able to get this foundation course, which will teach you what a call is, what a put is, what it means to buy it and sell it. The 4 core building blocks of options. You will get that, watch that first, and you will be primed and ready to go for the Options Paycheck course. In fact, we had a couple of people a couple of times ago when we launched this course. Shun typed in, like, I just took the tips taught in the bonus option fundamentals course on buying a call and made my first 7 option trades in my entire life in the last 2 days. Made on 5 winning trades, had 2 losing trades. Right? Already paid the class in full. Bobby says, I'm even more excited for the course today. Made real money with the SPX. All right, just paid for half the course fee. All right, so what do you get? You get all the things I just mentioned. What's the value? A lot, right? More than the $6,800. It's well worth more than that. Here's what we'd like to do. Now, this is the opportunity that's in front of you today. We're going to roll up our sleeves and work with a couple hundred people who are serious about generating income. And if you choose to be one of them, together, we're going to help you create an income system in your portfolio. Even if you've never had success with options or had experience with them. So you've spent about an hour with us today. If you want to join us and have us take you by the hand and walk you through this entire process and build your own income system, then instead of like $6,000, it would be $995. Right? You would go to optionspaycheck.com. However, I want to reward you, because those of you who have stuck with me for this hour. By sticking with us for this past hour, we want to give you an extra discount. Right? If you order before the end of today's webinar, instead of the $995, you can get it for $895. That's even lower than our elite pricing. So that means you get the full course, the 1 year of access to the course, 7 live mastery sessions, access to the software, the SPX bonus modules, the Facebook group, the members only coaching, the Options Foundation course, all for just $895. All right. The $895 will only be for those who register before we finish up today. All right. So you got to go to optionspaycheck.com. That should be in the chat box for you. You just go to the chat box, you see optionspaycheck.com. You can just click on that link, and you'll notice when you're on that page, then you just have to click the register button at the top. All right? Just ask yourself a couple of questions. What would it cost you not to do this? All right? How much money would you lose trying to learn it on your own by trial and error? How much potential profit would you miss out on by not doing this? How much time and energy are you going to spend doing this on your own? And I just want you to ask yourself, if you do this and it works, how would your life be different? I mean, some people think it's too late. Like, oh, I'm already too old. I'm already retired. Well, there's a saying, the best time to plant that oak tree would have been 20 years ago, but we can't go back in time. The second best time is today. All right? It's not too late to begin to prepare yourself for retirement and learn to generate income. All right? This is one of those deciding days in your life. Is it going to be the day you decide to take action and set yourself up for a secure retirement? Or is it going to be the day you look back on where you squandered an amazing opportunity to create a consistent income stream? I hope that you don't regret the decision that you make right now. Don't miss this opportunity. We look forward to working with you in the class. So just go to optionspaycheck.com. Get yourself registered now before registration closes. Remember, the $895 price is only available while we're live on the webinar. So it's even lower than our elite price. Right? If you want the lowest price possible, go there now, optionspaycheck.com. After the webinar, the price will increase to $995. All right? Don't wait, you'll miss out. So again, optionspaycheck.com. I'll do that for you right now. I'm going to go to the website. Give me just 1 second. Let me drag it over. So when you go to optionspaycheck.com, it'll look like this. All right. Now this page, it'll probably show you at the bottom $9.95. All right. But you got to click on the register button. When you click on the register button, it might take a moment to load, but on this next page, it'll show the discounted rate of $8.95. I don't know why it's running a little bit slow now. Maybe because a ton of people hitting it. I don't know. Wouldn't that be great? All right, so if you go there right now, this page that pops up will show the $8.95. In fact, I have it open on another browser here. It'll look like this, $8.95, and then you just hit purchase course now. All right. So in the chat box, if you know this is right for you and you're ready to join us, in the chat box, just type in 2 words, I'm in. Right? Scott's like, done deal. Quaid says, I'm in. Andy says, I'm in. Is it Jesus says, I'm in? Monica's in. Isaac is in. Jerry's in. Mark, Judy. Jesus, yes, says yes, that is Jesus. CJ says, I'm in. Those of you who are typing in, I'm in, right? Like David just typed in, I'm in. If you are in, first of all, welcome. Like, it's an honor that, I mean, we know this is an investment, right? You don't just wake up in the morning and say, boy, I wish I could go spend $895. So we know it's an investment, and we respect that you trust us enough to help you on this journey. So thank you for joining us. We will not let you down. All right. Larry, investor. Barb, welcome, all of you. Billy just typed in, I'm in. Welcome to you as well. So welcome to all of you who are in. You should be getting an email from us very shortly. All right. You should be getting an email from us very shortly with all of the details. Ralph just said, I'm in. I just purchased. All right. David, you say you want to pay by US dollars. This is US dollars. So when you go there, it should be in US dollars. Glenn is in. So check your email. The email will have all the details. There's a link in the email if you want to join the Facebook group. We'll get you into that Facebook group typically within about 24 hours. All right. So then you could get in there and start saying hi to everybody, start saying hi to us, interact with your fellow students. So just get in there and start interacting. But you can start going through the course right away. Everybody who is in, all you have to do is access the course. Like Donald just said, I'm in. Nicholas is in. Glenn is in. Let's see. Yeah, someone say, Michael says, I'm in. When you log in, if you're brand new to options, you'll have immediate access to the Options Foundation course. Check it out. Check out that Options Foundation course. Learn what a call is, what a put is. Do that now, because you'll have about a week before we do our first live session. So you can go through the foundation course. You can go through the beginning. You can go through as much as you want of the full course. So Jean is in, Sanjay is in. Welcome to both of you. All right. Those of you who are in, when you go to access the course, if you've already been inside of our membership area, you might need to log out and then log back in to see the course. All right, so get in there, check it out. Get in there tonight. Go through click around, look at some of the videos. I'm not sure if if I was able to log in and show you, I would. All right, get in there, check it out. So what I'm going to do, I know some of you have typed in questions. Right, some of you have typed in questions earlier. What I'm going to ask you to do is, if you have a question, let me answer the questions that are based on this course first. And then if you do have questions that are just related to the content of today, like what the options are, hang on to those. You could still type those in. My teammates are in the background. They could try to help you out as well. But I want to try to answer questions about the course first. So if you have questions about the course and maybe you're on the fence and you're thinking about it, I put a little flag on my screen. Even if you typed in your question before, can you copy it and paste it into the chat box again? That way I could read it and help you out. All right. And I love, there was a comment earlier. Let me see if I could scroll back. You know, when I see things like this, I mean, it means a lot because we put a lot of time and effort into putting these presentations together. And especially this one, I put a ton of time and effort into making sure we put this together in a logical format. And I saw something like this from Wayne, and I just want to thank Wayne in front of everybody here. Wayne's like, educational excellence in all respects, presentation best ever. Thank you, thank you. I've watched more webinars than anyone ever. So Wayne, that really, I mean, it means a lot, more than you know, because we really do put a lot of heart and soul into what we do. And your coach that you're going to get, Ron Wheeler, he's the gentleman who is the main instructor of the Options Paycheck course. He is the same way. He puts his heart and soul into everything he gives. He wants to make sure that you are making money in the market and generating income. So in all aspects, we are here to help you. All right, Monica says, I'm on the phone to order it. It's just not loading. Yeah, for some reason that website, when I clicked on that link, it was a little bit slow. Okay, we're seeing this kind of across the board. So sometimes you just got to let it sit there for a little bit and it will eventually load. Yeah, Mark says it's slow indeed. I experienced that even like an hour ago. Yeah, so give it a little bit of time, but as you can see here, it eventually loads. Like this page eventually loaded and it says $8.95. All right, so some people are saying, all right, well, when are the live sessions? All right, let me get to that. Hold on. Let me put a flag to make sure I'm getting these things here. So I do actually have a slide that shows the dates. Hold on. Now, that's an older date. Sorry about that. Darn, it didn't pull over the new dates. All right, well, I'll just tell you verbally here. The new dates are, the first live session is going to be on Thursday next week. Thursday, February 4th, and then it'll be every Tuesday after that. Those will be where we teach it live. And then after that, later in the week, typically on a Friday, most weeks, we will do our mastery session with you. But keep in mind, you can get into the course right away and start accessing the material. I know the website's being a little slow right now. It's not like that usually. I don't know why it decided to do that on the day we're talking about getting into this course. But what's the saying? Good things come to those who wait. All right, so let me go back up to the questions here. All right, there we go. Yeah, Monica says it's just loading, but not actually able to access it. Yeah, sometimes just give it time. Sanjay says, if I register, I have to enroll in VectorVest whole life, or can I use it independently? You don't have to register for VectorVest for your entire life. If you don't have access to VectorVest right now, we will give you access to it during the length of the course. We guarantee that whether you choose to use VectorVest or not after the course, you will have learned an income system, right? You will have an income system. You will know what to do, okay? Rafiq, since I just saw this question you're asking a question about the content from today, we never hold options until the expiration. So I don't want you to ever think, what's going to happen when the option expires. We will not hold it until expiration. Okay? Thanks, Paul. Paul says, I agree. This was a very useful presentation. Well, I appreciate that. I'm going to make a note of that. Scott wants to know about the Facebook site. He says, does it last all year? Here's how that works, Scott. During the length of the course, we're going to put you into a student-only group. That way, all you have to worry about is people with you going through the course. It is awesome because you and your fellow students are going through it at the exact same time, and you're talking to just those students. When the course ends, you will be invited and moved over. We'll send you a link to join our alumni group. All right. The alumni group is where you'll be put in with all the people who have taken this course throughout history. All right. And that's great because we've got people in there with years of experience doing this system. You can interact with them, and that's where Ron will meet with you once a month for the next year, after the course ends, and answer your questions, which is great. Let's say 4 months from now, you're a little rusty and you're trying to kind of get back into it and you have a question, hop into the monthly Q&A or just pop in and ask a question of your fellow Paycheck alumni. All right. Now, if you do want to call our office, I'll put our phone number in the chat. It's 888-658-7638. Now, keep in mind, sometimes after a webinar, the phones are a little bit busy. All right. Especially, I can understand since the queue, excuse me, the web, the interwebs, the internet is a little slow right now trying to access that site. Anthony says, after work 6 days a week, timing is important. Well, Anthony, the webinars that we do where we teach the course will be at the exact same time that we started today's webinar, 4:30 Eastern Time, typically on Tuesdays. The first one will be next Thursday, but after that it'll be every Tuesday at 4:30 Eastern Time. All right. Then the mastery sessions will typically be on Fridays at noon. Okay? And I want you to keep in mind that you do not have to attend the live sessions. Everything is recorded for you. You can access it and just watch the recording. Some people never attend a live session, and they're just as profitable. Right? You do not have to attend the live sessions. You will get a private email address to send us questions. So if you have a question, send it to our private email address. It doesn't go to the main VectorVest bin. It goes to a private inbox just for Options Paycheck students. All right. David says, Brian, it's wanting to charge me 740 pounds, which equates to 1.2 at the exchange rate. That I'm not. Oh man, I wish I knew more about the differences there. So I'm going to flag that one for my teammate John to try and help you with. And by the way, if you're asking questions, also keep an eye on the chat because my teammates are answering you in the chat as well. John, David G, back at 5:49, a few minutes ago, he was talking about conversions. Maybe you've answered him since then. So take a look at that one. All right, so some people were asking what times. I was just answering that. So Anthony, there you go. Those of you, some of you had said you wanted to take this course again. Maybe you took it a couple of years ago. If it's been longer than a year since you've taken this course and you just want a refresher, maybe you like all the bonuses, you want to do that all over again, you can. I don't have a link that I could give you. Maybe if you're interested in doing that, the price is like half off. It's like $4.95. You can either let our team know in the chat, or you don't actually have to order that like while we're live. You can call in tomorrow and do it. Yeah, you can call, or we probably would have sent you a link via email. Glenn's like, finally got it. I got out and then got back in, and now I see the course. Awesome, Glenn. Thank you for letting us know. Investor says, I just paid, but I can't log in. It could be due to the website running a little slow. Just be patient with it. Like Glenn said, it might take a little bit, but you'll eventually be able to log out and then log back in. Mark says, all right, I got it. It now shows under the My Courses tab. Yes, definitely. Awesome. Jerry says, do we download the VectorVest February 4th? We will give you a recording of the course. All right. But Ron will teach it to you live on February 4th. We're not going to give you a recording of that one because it'll be the same content as what he teaches in the recorded module, but the benefit is, he might splash in a couple of things that are going on in the current market, but you'll be able to ask questions at the end. And yes, we will give you a recording of the Q&A at the end. All right. Yes, Investor says, where do I go? Oh, Investor, you say you got your confirmation email. Fantastic. After you signed up. Yep, it's just, once you sign up for this course, the university site is, to access your course, is just university.vectorvest.com. Scott says, VectorVest is the best in the industry. I've tried them all. You know what, Scott? You're gonna make it to the wall of fame over here. Scott makes it to the wall of fame. VectorVest is the best in the industry. I've tried them all. Thank you very much for that, Scott. We work really hard to do this, and I hope I speak for everybody here, but it comes from a desire to actually help you make money in the market, right? Because we all believe in the tool that we use and the things that we teach. All right, so Paul, you're asking about, I'm not quite sure I understand what you're typing in there, but we are going to do index options. You could do ETFs, but primarily index and equity options. We're not going to get into spread betting. No, that's different. We're not, this course does not teach spread betting in the UK. Anthony, the mastery sessions are at noon Eastern time, typically on a Friday. The first one will be Monday, I believe Monday the 8th. Okay? Larry, I'm going to flag that one for my teammate John. You're saying you see the course twice. Twice is good, right? Double the, what is it? Double the flavor, double the fun? Was it a peppermint commercial or spearmint? I don't know. I flagged it, Larry. I flagged that one for my teammate John to take a look at. I'm not sure what could be going on there. Investor, in the email that we send you for the confirmation, it'll have the private email address for students. I'm not going to just I can't just say it to everybody because I want it. It's just for students. Anthony, you say you'd like to join, but prefer to join once your questions are addressed. Let me see if I can scroll back to find any other questions. I thought I answered the one on when the sessions were. So Anthony, you had say that your main question was the dates and the times of the sessions, the day of the week of the sessions. All right, so Anthony, did I answer those questions for you? I think I did. Thank you, Anthony. Thank you for letting me know. You said yes, you did. Perfect. All right, I lost my spot. There we go. Sanjay says, I already purchased and want to know that all recordings I can use in the future. Yet you have access to it for a full year, Sanjay. So, I mean, you don't have to, there's no rush, but the live sessions we have to do over a period of 7 weeks, starting next week. But you have access to all the recorded material for a full year. Bennett, the Options Pro software will become active by next Thursday. All right. I'll say, how about on next Thursday? I don't want you to think it's going to become active tomorrow. It'll become active, let's just say Thursday, next week. Paul, if you don't have access to VectorVest right now, you will be given access to VectorVest 7 intraday, which is, that's the full software. I mean, it doesn't, not all the plugins and everything, but the VectorVest 7 intraday plus our Options Pro software. David, you're asking about that bonus, this options, the members only group coaching. We will automatically register you for those starting the week of February 8th. Jerry says, looking forward to the course. Awesome. Yeah, and if you have any worry, you will get emails letting you know when sessions are starting. Like you'll get an email a day in advance, maybe like an hour or so in advance of any live session. Thanks, Michael, for being here. Appreciate the nice words. Sorry, I'm now kind of just scrolling through questions. I'm trying to read as fast as possible. It looks like some people are on the phone with our support team. That is fantastic. Investor, if you want to access the course, the website is university.vectorvest.com. So that's once you sign up for the course and you've paid for the course, you just go to university.vectorvest.com and log in with your username and password, and that's where the course will be. Terry says, I just signed up. Terry fears that he clicked the payment button twice. Anytime you guys have a billing question, just call our office. Calling like right after the webinar might not be the best time because the phones might be busy. But if you have a question about billing, our team will help you out. Just call our office. I recommend calling and not emailing. That way you can actually get somebody on the phone and talk to them. Anthony, if you want to do that, I'm going to hold this same webinar tomorrow night. All right, same time tomorrow. So if you missed a chunk of today's webinar, we'll catch up tomorrow, and you just have to register for it. There's a link on our website to register for it. Maybe my teammates can help you out with that in the back. Ryan says, do I need to know how to use the VectorVest software to be able to take this course? Absolutely not. Anytime we do anything in the software, we will give you training on how to do whatever's necessary. We like to think of it as just-in-time training. Like, we're not going to train you on every possible thing you could possibly do. Right? Anytime we do something, we're going to give you specific training on the one thing that we're using. All right? So let me see. Some of you are asking, what do I see inside the course? Let me actually log in. I'm going to do it myself. I'll show you the course. Richard says he's signed up. Welcome, Richard Z. Gene says, how do I sign up? I love questions like that. Gene, just go to optionspaycheck.com. You can either type the link that you see there on the screen, optionspaycheck.com, or you can click the link in the chat box. All right, David, G, Tyrone, Richard. Looks like my teammates answered you in the chat. Luis says, I'm in. Welcome, Luis. CJ says, do we need to know the technicals to trade this strategy? No, everything that you need to know, CJ, we will teach you in the course. You don't need to have prior knowledge. Like, you might need to know that there's a thing called the stock market and the options. You might need to have a broker. That'd be beneficial. Like some knowledge that about just investing would be actually beneficial, but you don't need to be like a seasoned trader. All right. Let me see if I could do this. Hold on. This is me. After you sign up for the course, you just go to university.vectorvest.com, and when you click sign in the corner, you just sign in. I'm going to see. I know it's running a little slow, so we'll see how long it takes. Awesome. So again, if you have any questions, type them into the chat. If you're in and I forgot to call out your name, just in the chat box, say, hey, I'm in. Brian, you forgot me. Also, you ask whatever you want. I mean, I got about 5 more minutes or less, and then we'll start to wrap things up because it's getting a little bit late. Investor, welcome aboard, first off. Benjamin says, yo, Brian, I'm in. Could be like Rocky, like, yo, Adrian. Yeah, so thank you, Benjamin. So investor says, do we sign into the university or VectorVest first? Once you sign up for the course, then from then on, to access the course, you just go to university.vectorvest.com, right? Go to university.vectorvest.com, and then there's a sign-in button in the corner. When you click sign in, that's what's going to bring you to that login page. All right, and I don't know why it's running so slow today. If I had a magic wand, I would make it go faster. David wants to know, how do I get on the private Facebook group? In the email that we send you, there will be a link. All right, so if you get this gateway timeout, first off, clench your fist and go, "Arr!" Like you have to make a groan and shake your fist vigorously, right? And then I might just hit the refresh button and see what happens. I don't know why it's doing that. Elaine, thank you very much. Says excellent presentation. Thanks, Elaine. So David, use the link in the email we send you to join the private Facebook group. And it usually takes us about 24 hours to get you approved for the group. All right. Well, see, I'm shaking my fist at the computer screen, and it's not going any faster. All right. So I apologize it's taken so long. Anthony says, hey, I signed in. So everybody, Anthony has made it so that it's slower for everybody else. Jesus says, done, registered and paid. Let's make 3% per month. Now, I love the positive attitude, Jesus. What I want you to do, keep that enthusiasm, but don't focus on the 3% at first. And I guess this is kind of for everybody. I want you and everybody else to focus on doing it right. Focus on learning the system, getting it right first. Okay? Once you learn the system and you implement it, the money will come. Okay? But I don't want you to be like, oh, I didn't make 3% and it's my first month. It'll come. Right? Start out small. You might have a $50,000 account, but you might say, well, you know what? I'm just going to dedicate 10 of that until I learn this system. And you trade one contract at a time. David, you're saying it might take until tomorrow for us to process the payment. Yeah, if it sounds like what I'm thinking about, it'll take for our system to bill it, and then it'll automatically fire off the email to you with the link. Well, you know the link. It's just university.vectorvest.com. But it'll take us to process the payment for your access to the course to be there. Yeah, investor. I know Facebook isn't I'm not a big fan of Facebook and some of the stuff that it's done. The downside is it's so we've used it for so long. We've got so many groups in Facebook that it's something that we're still using, right? We tried a different thing built into our membership site, and it didn't, like a discussion board, and it didn't go over as well as when we had Facebook. So we'll continue to look. Lennon, I can understand your frustration that because you're a subscriber of VectorVest and you wanted free access to VectorVest, but I want you to think about it this way. This is the way I think about it: is when you first started out with VectorVest, would you agree that when you first started out, you probably, if you're like 99% of the people who start with VectorVest, you probably started out with VectorVest on a trial. Maybe it was like a $9 trial, and it lasted for 5 weeks. Or, like right now, I think on our website, there's like a 99-cent trial for 5 weeks. But when you first started, there was a trial. Here, if somebody does not have VectorVest, we're asking them to, spend $895. And for that, we're going to give them a trial to VectorVest. It'll last for 7 weeks instead of 5. All right, but we're going to include a trial. All right, so that's kind of like what we're doing. All right, so yeah, that's my explanation. Now, Lennon, you probably you might not have Options Pro right now, so you'll get if you don't have Options Pro, you'll get access to that for the length of the course. Okay, thank you for letting me know in the chat that you got it. That's the way I think about it, so I'm glad you understand. All right, with that, unless I missed a question, let me know in the chat. Like, did I miss something? Anybody? Investor says access to VectorVest will be for the 7 weeks. Yeah, it'll start by like February 4th. That'll be the first day that we consider the start of the software. And it'll probably go until near the end of March. I think it's like March 25th or 26th is the last day of the software access. You're welcome. Lennon says, and I'm in. Welcome aboard, Lennon. Great to have you on board. Ryan says, I'm off work now due to an injury and you have some time right now to learn something new and beneficial. Would it be better to take this course when I'm ready to invest or start now? I can't make that decision for you, Ryan. Right? If you have the time now to learn a system, like if you're off work, you're the best judge. Like you can be in there and learn how to do it. That way, when you're ready to invest, you're ready to go. The other, like Todd just typed in the chat box, he's like, have you ever invested before? That is an excellent question. I'm glad my teammate asked you that. If that is the case where you've, okay, so you say you're a total beginner. I'm going to be completely honest with you, Ryan. I would rather you go to our website and take out a 99-cent trial to VectorVest. Spend $1. Go through, we call it the Quick Start course, and learn what it takes to be a successful investor, and just spend 99 cents and use the next 5 weeks learning the basics of investing. I don't want you to spend, in fact, I'm going to ask you right now, do not spend $900. I'd rather you become a better investor first, feel more comfortable about investing, and then when the time is right, our paths will meet again for the course. Does that make sense? You're welcome. Anthony, you're welcome. You say thank you for addressing my questions. Let's see. Did I miss one? Jag says, when I called SPX option trading, Schwab is not allowing to trade. Is there any option level to be requested? Typically, most brokers would call it level 3. And you could call your broker. Virtually all brokers have a way that you could ask for the the access online. But yeah, if you can call, better, because your broker wants you to be involved in their brokerage and trading. So if possible, they will help you get through the application process for level 3. So great that you're going to call them and ask. Thank you, Anthony. Says great presentation. Appreciate that. Bennett says lockdown is a great time to do this course. Yeah, I guess there's a good thing and a bad thing, right? About the lockdown. Awesome, Barb. Hope to see you next week. Monica says I'm all signed up. Can't wait to see you in there. Ryan says I just didn't want to lose out on the course offer. Ryan, I'd rather you become a better investor. What is it? When the student is ready, the teacher will appear, something like that? Or it's something like that. Ryan, when the time is right, the paths will cross again, if it was meant to be. So become a better investor, do that well. And then you'll know the time is right. Mark, see you later too. Benjamin says, when will the VectorVest University be accessible? You know what? I hope as soon as possible. Investor says, please repeat the course dates. If I had a calendar, I mean, February 4th, Thursday, is the first live session. All right, February 4th. Let me see if I can. I thought I. I do. I just had it on the wrong spot. Hold on. This whole time, I had it. First live session is February 4th. 4:30 p.m. And then it's every Tuesday after that. So far, so good. Then, let me move forward one slide. There we go. All the green here are the mastery sessions. The first one happens to be on a Monday. Then after that, it's just Fridays all down the list. Okie doke. Jag says you've already gone through the option foundation builder. Is any reduction on the price for the options paycheck course? No. It's just like the options foundation thing is a bonus. Like it's not. It's something that we're giving you as a bonus for the paycheck course. Is the price of the course is the price of the course, right? So it's just like, all right, that's the price of the course, and what are we gonna do? We're gonna give you some bonuses on top of that. Right? It's not like a cumulative thing saying, oh, the foundation builder is $200. Even though I was listing what the values were, that doesn't mean it was part of when we factored in the price of the course. Like we would charge that price of the course, whether we had those bonuses or not. Yeah, and so, it doesn't show your name. It just says option as your first name. If you took the course several months ago, I mean, we can't go back in time and change your price, right? You know, we're not going to say, oh, we're going to give you like $100 discount from something you took, several months ago, right? I mean, this course, it's worth. Definitely worth the $8.95, definitely worth the $9.95, definitely worth the $14.95, which it'll be next week, and definitely worth the $1,990. Right? So, the $9.95 is what most people pay for this course. The $8.95 just happens to be at the end of the webinar, and I guess it's possibly. It sounds like you didn't at the 6 months ago, whenever you took the course, maybe you just signed up. Not at the end of a webinar. But I'm hoping now, I mean, you've built an income system where like the $100 is probably not an issue for you anymore. right? You're like, man, I got my my income system rolling. Like, I'm glad. I would. Some people tell us they would have paid double. Like, I'm not. That's just the facts. Like, a gentleman named Bruce, he started out with $100,000. You know, he just happened to tell us this several months ago. He's like, I started out with $100,000, and 3 years later, like I think it's 3.5 years later, he was at $497,000. Like, the $100 is, if we were to ask him, hey Bruce, would you have paid $3,000 for this course? He probably would be like, yeah. Anthony, the schedule will come via email. All right. I mean, it's on the screen now if you want to take a picture of it. In GoToWebinar, you can take a picture. There's that. There's that. Here, I'm going to go fast. I'm just messing with you now. All right, folks. I think that got all the questions. Again, go to optionspaycheck.com, and we look forward to having you in class. And we will hopefully see you at a live session or in the Facebook group or via email or wherever. All right. And if this isn't the right time for you, maybe you're like Ryan, it's not the right time. We hope our paths cross again in the future. And when it is the right time, I wish you the best of luck in anything that you do, whether it be these options, income coaching, or stock investing, or swing trading, or what have you. Wish you the best of luck, and that you continue to move towards that retiring with peace of mind. All right. Have a great evening, and we'll talk soon. Bye, everybody.